Hello and welcome everyone to today's live commodity market analysis with the Gold and Silver Club for the 24th of November 2016, presented by myself, Phil Carr. So during the course of today's session, we will be covering live market analysis. We will be creating a short list of trading opportunities. We'll go through a trading plan for the week ahead. We'll run through an overview also of the commodity markets and, of course, our top trade of the week as well. So before we get into it, before we go into the analysis, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 125,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is at www.thegoldandsilverclub.com. Okay, so with that, what we'll have a look at first before we get into the charts, I want to just give you a bit of an update and an idea of where we are now here year to date in terms of the performance of a lot of the commodity markets, which has certainly changed now since the US election. So over the last couple of weeks here, we've seen quite a dramatic change in terms of performance of commodities. The #1 best performing market this year is now orange juice, up over 42%. Followed by ethanol, up 37%. And in third place, palladium is now the best performing of the metals, up over 29%, followed by copper, which is up 22%, sugar up 21%, heating oil up 21%. Soybeans up over 20%, and silver has dropped down up over 16%. So we've seen silver up as high as 45% after Brexit. So we've had fairly significant correction on silver, and also more recently gold, which is now up just under 11% for the year. Cotton's up over 11%, and coffee also up 12.5%. So with that in mind, in fact, some of the other commodities which have not performed so well this year include cocoa, which is down 21%, wheat down 20%. Okay, so what we'll do, we'll move over to the charts and we'll have a look at the trading opportunities which are now starting to develop as we go into essentially the US session this afternoon, although we have Thanksgiving in America today. So as such, a lot of markets are closed today, particularly the agricultural markets, and also with the precious metals and also oil, we will see those markets close slightly earlier. So the first market we'll have a look at is going to be the US dollar. US dollar yesterday surged again. We broke out to 14-year highs, the highest level since 2002. So with that, we are currently in quite a significantly overbought condition for the US dollar. However, the overall sentiment momentum at the moment does follow more upside right now. So I see the potential for certainly a pullback in the days to come. But at the moment, as we've got Thanksgiving, we've got also Black Friday tomorrow, Cyber Monday as well next week, is traditionally a time of year where we see an increase in retail sales, consumer spending. Normally the overall sentiment of the market this year, you've got the holiday cheer, overall seasonality for the US dollar for stock markets tends to be positive, which we discussed last week as well, as opposed to negative. So this is not unusual to see the US dollar rallying prior to Thanksgiving and prior to Black Friday, Cyber Monday. And of course, with that, some pressure to the downside on the metals. Now, what I will do, I'll break it down for you, first of all, in terms of the price action here on gold. Now, we did mention this last week, where it is very unusual to see gold just come back down to a round number such as 1200 and just find itself supported at that zone and reverse back. Normally, the markets don't behave, especially the precious metals, don't behave in that way, where you would see a significant decline in price. It's been over 12% decline now since the US election. It is unusual where you would see a move down to that level and just suddenly reverse at a major zone like that. And you can see with that, we have broken through this level. Was definitely expecting a breakdown of 1200. We're currently sitting at 1,184 US dollars per ounce on gold. You can see we've overshot the 50% Fibonacci correction as well here. So we have overdone it. With this move to the downside, we've had a correction over 50%. And the next major zone, which a lot of traders will be looking at, is the 61.8 Fibonacci retracement level, which is where we take into account the lows going back to December 2015, the highs after Brexit this year. We've had a reasonable correction now following on from that. And there's still the potential for gold to break down slightly lower here before it starts to come into some support. Now, interestingly, we've now seen this correction go on for gold. As of this Friday, we will be up to 4 months that gold has been correcting, which puts it at the extreme zone of where you see a typical correction in a bull market. So it is a bit of a make or break level as we go into December. But with that said, we've got a lot coming up now as we do go into December. So next week, of course, next Friday, we've got the non-farm payrolls. And we have also a number of elections which will be coming up in Italy, Australia, the Netherlands, France, and Germany in the following months. Italians are going to be voting on December the 4th. We could certainly see some volatility in the markets. And with that, with some of the uncertainty that we could have over the month of December, I do expect more trading opportunities. Now, at the moment, we had the minutes of the FOMC, which were delivered on Wednesday this week. Ultimately, those minutes were again a bit more confirming for a potential interest rate hike in December. That is getting priced into the markets at the moment. We saw a very similar situation last year in December where we saw a correction on gold and silver and also the other metals as we move towards the December FOMC statement, where they did confirm that an interest rate hike was going forward. And with that, we saw essentially a lot of that move priced into the markets. And in fact, we saw a rally afterwards. We bottomed out in mid-December with the metals, and then we continued to get a double bottom right at the end of December. And then we rallied over 15% the following quarter. In fact, it was an over 2,000 point move over January and February from the lows. So this time of year is very interesting for the metals. It's not unusual to see a correction like this. It's not unusual to see a major level of support like the 1200 level get breached. What I'm interested in now is the potential for retracements around this level. Now, we're not at that point at the moment, but I suspect as we go into December, you will want to watch out for a move down to this 61.8 Fibonacci retracement level, some sort of shakeout at that level as well, and a reversal. And if we start to see a reversal, close above the previous day's high, a close above a positive close on a weekly basis, there is the potential certainly to look at a retracement trade here where we've got very overdone in the short term here for gold and looking for some sort of retracement higher here to take advantage of as we go into January as well. Now, it might be that we get this reversal. It could occur in mid-December. It could occur as we go into the beginning of January. The timing of this, we need to just wait, be patient, and looking out for this opportunity. Certainly on the long side at the moment, bulls who are in this market right now, if they've still got their long positions right now, will likely be positioning their stop loss and sweating slightly, moving the stop loss just under around the 1170 zone. If not, they might have already come out of this position. We have to remember this time of year, a lot of funds will be looking to bank profits if they've been holding longer term trades since the beginning of the year, where we saw a lot of funds come into the market over the month of January, pushing the price up significantly. We will start to see, especially investors who've been holding on to their position most of the year, they will certainly want to make sure that they're coming out with some profit between now and the end of December. And that's what we've seen, a lot of liquidation of positions here, causing this breakdown to the downside. But now I am mindful that we're going to get into an extreme oversold condition. So right now, just awaiting really to see where the next major levels gold and silver could possibly come down to before they get some sort of a snapback in price. If we see a slow and steady grind lower here, we'll be watching to see how that price structure develops as well. But I will look over now and just talk you through silver as well. If we go over to the silver chart at the moment, silver has also been breaking down, of course, over the last week. It's now broken below the 61.8 Fibonacci retracement level. Again, no real big surprise here to see silver break below this zone. It's getting quite close to the June lows as well. We just come back down to lower end of a trend channel, finding some support. It hasn't broken down as much as gold at this point. And again, I would keep an eye on this major zone. We are also correcting over about a 4-month period here for silver, where they're getting towards the extreme zones within time and also within this overall correction from the highs to the current low of where you would expect some sort of a retracement. Now, you don't want to trade the retracement and potential buy unless we get a confirming move. So if we get a setup to trade that, we'll take advantage of that because it could be quite quick, quite significant. Otherwise, if you're looking to be a seller in this market at the moment, we're getting quite oversold. I would look for opportunities to sell on rallies right now, as long as rallies were to get sold into that we've seen at the upper end of this trend channel. But we are coming into a time of year in January where typically that can lead to some good gains here. It's no surprise to see gold, silver correcting over the month of November. That's very typical. And as we go into mid-December, we could see a similar move as well, or certainly consolidation. But then as we go into January, you want to reposition yourself, be assessing the markets at the beginning of the year. Certainly last year, if you go back to the price structure that we saw going over December 2015. This was the move that we got. Very similar. If you go over to the rejection candle, which formed at after the US election, the follow through that we've had a very similar move to what we saw previously going back to 2015, where we continued to break down. And then essentially we broke down and reached the lows around mid-December, the time of the FOMC statement. We then consolidated for a couple of weeks, and then January was the start of a much bigger move. But gold really was the star here in terms of the two markets, which really saw significant upside. So I'll just bring you over to gold again. If we have a look at the gold chart, and I'll just bring you over to the December price action, you will see where around the FOMC statement last year, we hit 5-year lows. We then started to rally. We then hit another low around mid-December. And then from that point, we got a double bottom. And from this point onwards, over a 2,000-point rally, especially as we got into January. We saw a significant move in the first week. Fund managers added to these positions from the COT reports. We saw significant inflows into gold and silver, but gold in particular was a star over January and February. We got a 15% move in the first quarter. So just be aware that markets do like to repeat themselves. We seem to be in a very similar price structure at the moment to what we saw last November. A lot of similar factors, a lot of changing factors as well, of course, this year with Brexit, with Donald Trump being elected in the US. So we've got that additional uncertainty in the market. Certainly as a result of that, the US dollar has been rallying significantly. 14-year highs breached. We've seen rallies on stock markets with the Dow Jones, S&P 500, the Dow breaking out to new all-time highs. So we've certainly seen those sort of moves. But right now is a time to start to reflect and look for good opportunities now as we come into December. We've got non-farm payrolls next week. We've also got the OPEC meeting. So for those of you who trade oil, I am watching this price structure very carefully, because if we go back to the previous OPEC meeting, which occurred at the end of September, this was where we consolidated into this pennant formation, ultimately breaking out from that level, following through over 10% and breaking back up to $52 per barrel. Now, over the last week and a half, we have seen a pop to the upside. We've come back to the $48 per barrel zone. We're consolidating at the moment. I don't expect big volumes today for oil. We're probably going to stay quite tight in terms of the overall range from highs to lows over the Thanksgiving today and tomorrow. Possibly volumes will be fairly shallow as well. And then next week, especially going into Wednesday's OPEC meeting, that is what I'm looking for some good trading opportunities to take advantage of whatever the result will be off the back of that. Oil is certainly static at the moment on uncertainty about a planned production cut. Now, OPEC nations, they're meeting on November the 30th. That's Wednesday, to finalize a pact on freezing oil prices. So this could certainly be a catalyst. Expect volatility prior to that, but we'll be looking to get on the back of the trading opportunity which results from that announcement. Now, today, due to the fact that it is Thanksgiving, the agricultural markets are closed at the moment, so there's not much additional analysis to do on those markets right now. I would continue to watch the metals here. So gold and silver, I'd like to see where they are going to start to find their legs a bit after the recent corrective moves, whether we'll see more pressure to the upside with the US dollar, which will cause more of a flash out with the metals, or whether we'll start to see some sort of support here as we go into December. Non-farm payrolls next week will certainly likely be a catalyst also for some big moves on the metals. OPEC next Wednesday. So we've got a lot happening as we go into December. The FOMC statement as well in mid-December, which will provide trading opportunities. So for now, right now, that is what I would be looking at, especially on oil. We're getting this nice little pennant formation actually on a tighter time frame. So you can see here where we're just building, which is very typical before major news items. So we'll see how this price structure develops as we go into next week's OPEC meeting, getting tighter and tighter, smaller volumes at the moment. Not too much to be done here on oil just today. Other markets which have had significant moves over the month of November, palladium has rallied over 19%, been a very significant breakout off the back of this consolidation. Came down to the 61.8 Fibonacci retracement level as well. So note that is a very key level as well. So often when you see a correction, this has been where we hit the lows going back to June 2016 to the highs, broke down to the 61.8 Fibonacci level, consolidated at that zone, then we rallied 19% in 1 month. That was after a 61.8 Fibonacci correction. Now, keep that in mind. Now let's have a look at where we are with silver. Silver is around the same level, 61.8 Fibonacci level at the moment. It's corrected to that zone, watching that carefully. Gold as well. This is where the 61.8 Fibonacci level is at the moment. There's a lot of fear in the market at the moment revolving around the precious metals, how much lower they're going to go, or they're going to now turn into a bear market. But we've got some major levels to look at. I would still be encouraged in terms of opportunities which are coming up as we go into December, as we go into January. Just make sure that you've got your trade alerts set up. Be aware of big moves, because often after you've seen these big corrections, you can suddenly within 1 day you get huge moves, and you don't want to miss those. So you just want to make sure that you're ready and set and able to take advantage of the opportunities which will come over the month of December and also January. So with that, I'll just talk you through our top trades that we've had over the last week and a half here. So we've benefited now on our cotton traders hit profit for 435 points profit earlier on in the week. This work played out perfectly. The pennant formation, the breakout that we got back to resistance. Also, our WTI crude oil trade last week, banking 200 points profit as we took that back up to resistance as well. And palladium has worked out really well after the US election trade, where we've taken a breakout from this consolidation for a 620 point trade. Now, if you would like access to the trade setups, the live trade ideas that we provide to all of our members at the Gold and Silver Club, shared with you, ready to implement, very simply, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we'll get in touch with you ASAP. All I ask is please do make sure that you mention during the course of that application that you are on FX Street. That would really help us. We get a lot of applications at the Gold and Silver Club. If you can just mention that you've been on this session on FX Street, that would be ideal, and I really appreciate that. So to get exclusive access to our private members live trading room, just go to www.jointhegoldensilverclub.com. Also, what do you get with that, and who's it for? Well, essentially, if you are a new trader and you want to develop just a solid understanding of the markets, fast track your results, or even if you're an experienced trader but you just want to take your trading to that next level, the private members live trading room is definitely something for you to consider. You get access to our exclusive live trading room webinars. You can watch the Gold and Silver Club expert traders analyze the markets right in front of you, going through trade setups, entry points, profit targets, stop loss, as well as walk you through live trade ideas ready to implement. You get notifications via email and SMS so you don't miss out on any trading opportunities. You get access to our week ahead trading plans, commodity research as well, so exclusive research, our proprietary trading research, and market insights to help boost your win rate and ensure you're getting on the right side of trade. So all of that includes exclusive weekly live trading room webinars, live trade setups ready to implement for instant results. You get real-time notifications via email, SMS, so you don't miss profitable trades, exact details of where to enter, exit, place a stop loss. You get the weekly trading plan with a watch list of our trading ideas for the week ahead, live trade support to help you through trades, and institutional level trading research and commodity insights to give you the ultimate edge in the market. So again, all you need to do to get access to that is go to www.jointhegoldensilverclub.com, complete the application form. We'll get in touch with you ASAP, and please do just mention that you've been on today's session on FX Street. Okay, fantastic. So with that, guys, happy Thanksgiving. I wish you good trading. All the best. We'll speak to you very soon. Okay, take care, guys. Thank you. Bye-bye.